The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great week, folks. This quote is by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We have the Dow Industrials down 103, Nasdaq's off 41, S&Ps are off 15, gold contract up $18.40, trading at $1,234 an ounce. Silver up 19 cents at $16.61 an ounce. Platinum up 12 at $1,243 an ounce. Copper down 3 pennies at $2.72 a pound. Light sweet crude off $2.34 at $46.02 a barrel. Getting smoked once again. Bonds. The ever-ready bond market, folks, is just amazing. Give it a 10-year, up 15 ticks, 129.02. That's going after the October 15th high. The 30-year, which blew that away 2 weeks ago, that's up another full point at 148.14. 30-year, folks, is a confirmed ABC structure on the way up. The first price target is 150. King dollar up 53 ticks, trading at 92.20. King dollar tested its highs of last week. I expect that's it. Meaning you topped out, you failed on a daily, you failed on a weekly. It's not really a failure either, folks, because, by the way, what you had there is that the dollar was trying to make this test for 9 years and 2 months. Bottom line, it got up to that level. And what we will see now is that how you back off, and, in fact, you have volume off the top. We don't have anything in stone at this particular point. It's just going sideways. Try to get a little bit higher today. Couldn't handle it. Euro is down 3 ticks at 118.38, and the yen is down 16, trading at 118.34. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. If we start off with the future S&P, what you're going to see here, folks, is this. So you come off the highs. The highs that we come off is 2088. You take the leg down to 1995. What do we have out here today? Well, there's a divergence here because in the future market, you are getting juice on the way down, meaning you get an expansion of volume on the way down. Thus far in the futures market, we've done, let's see, 190,000 contracts. And what we had right off the bat, there's some monster out there that is definitely selling into this market because right off the bat, on the open today, they hit this futures and they hit it hard, hit it fast. That being said, if we go look at the SPY, so let me show you this little divergence here. If we take a look at the SPY, what we have with the SPY is this. The SPY thus far has come down, and you're talking short volume on the way down right now. The SPY right now, we've done 97,000 shares. You're going into, though, 200,000. So the way the SPY is set up is that the market, because I love it, it's trade is... Excuse me, folks, the trader's paradise out here. Because the way the SPY is set up is that you should get a small bounce. We'll see whether that small bounce comes in or not. Larger October 15th is the runway here. That runway, we're 202 on the SPY. That's 181 at that runway down there. But I do expect, we'll have a better understanding really coming into 4 o'clock. Because if the volume stays at this particular point, like we are right now, the SPY would still have to get trade. We're at 202.42. If we land here, this is not going to bounce at all. You're going to go right after the swing lows, meaning you'll go after the swing low that was generated out here on the 6th of December, of January rather, and then you'll go right after the December 16th one. If the SPY can bounce right now to 202.74, then it would have a shot for a small bounce. We take a look at the NASDAQ composite. We'll do the 3Qs. 3Qs out here. We've done, thus far out here, we've done 28, let's see. Yeah, 28 million shares. That 28 million shares is going into 66. So the same is applicable when we do look at the 3Qs. What has happened inside the Index 100 is this. Taking juice out of it, you get SanDisk is getting smoked. SanDisk is down $13.85. Micron Tech is off 190. You get TripAdvisor down 344. And you have American Airlines off 237. Putting juice into the NDX 100 today, even though it's down, is that you got Whole Foods up $1.94, Celgene's up 354, Biogen's up 585, and you got C.H. Robinson up $1. The small caps, we go take a look at the small caps. We use the IWM inside the small caps. What we have with the small caps is this. Small caps are coming into 67 million shares. And thus far, the small caps have only done 17 million. The difference, however, is that the small caps would have to get up and over 117.77 to get any breathing room topside. So bottom line is that each and every bounce is getting sold. Gold contract, let me tell you something, folks. Gold not only wants to move, but my take is that this gold, whatever is hanging out here right now, gold wants higher price in an extraordinary way. And what we have is this. Right now, we are trading in the gold contract at 1233.90. The swing point up here is 1239. I expect you're going to not only go after that, but you'll blow that away in about 2 heartbeats and get up to 1256. You have an expansion of price and volume out here today. Thus far, inside the gold contract, we've done 155,000 contracts. If you go to the XAU and the HUI, this is what you have. Now, the XAU and the HUI is screaming for higher price. And what we've had thus far is this. The HUI was the first one to break out. It broke out. It had decent volume. You're going to need more. If you're looking at the HUI, we want about 30 million shares. Thus far, the XAU right now is trading at 79. It's over the cold consolidation. Now, what that puts some big juice into this, because once the XAU did this today, meaning got over the consolidation that it has been trading in, and that had been trading in that consolidation since the 29th of October. What that sets up, that sets up, we got a what, 40? Let's see, 67. Yeah, that sets up this. This XAU is going to be running all the way up to this 93 area. We go to the HUI. We take a look at the HUI. Now, the HUI had broke out last week. HUI right now is at 194, and that number up at HUI is at 226. So you're talking some very large numbers inside the gold market. And the rest of it's there in spades also. There's many of these gold stocks that are moving with wide price spread with accelerated volume. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom, we're in a heat wave, 34 degrees.
30. Man, you guys have really had some cold weather, man. I was talking to my daughter, and even yesterday it was only 24, man, and she thought that was good compared to what you were having, right? Yeah.
I'll take it.
Yeah, totally, man.
What's it doing in Florida right now?
It's 75, 76. We get a little drizzle, but that's unusual. But it's warm, man. It's beautiful.
Do you want me to feel bad for you? Forget about it.
Come on down, man. Come on down.
Soon. Hey, I wanted to get your input on Friday. I saw the hanging man on SanDisk and MU.
Yeah.
And it looks like a hanging man on our favorite stock there, NXPI.
NXPI. So let's take a look at this. That's NXP Semiconductor. Yeah, don't go short this, man. Don't do it. It's not there. This should, listen, you know, SanDisk is down, $13 today. That gap lower. Micron is basically here. Watch, if you take a look at Micron is coming into its swing point. It's going to blow its swing point away. That swing point there, the low of that swing is 31.45. You're at 31.59. It's pushing in there with volume. NXPI is a different ball game, and you know I'm not quite sure you know what the business is out of that. So that's a global. They design semiconductor software, mobile communication. Maybe it's because they're in the mobile space more than the other two. But you know, it's a different looking stock, man.
Okay. Hey, now, quick question. Can you look at when you get back XLNX? Is that doing an ABC down?
You stay right there. We're going to be right back. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. You have the Dow down 100. NASDAQ is off 39. S&Ps are off 16.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 98. They get NASDAQ off 38. S&Ps are off 13. We're talking with John from Winchester. And what was the second stock you wanted to look at, John?
Well, I wanted to see, I'm trying to get my bearings again on the ABCs, ups and downs.
Okay.
Xilinx XLNX. Is that doing an ABC down?
Okay, so let's take a look at Xilinx. So this is in the chip space, and what this is, folks, this is specialized chips. Right now, it's trading down 53 cents at 42 bucks. It's building cause to basically try to do one. What it hasn't done yet is this, John, is that you trade now to 42.58, and the daily volume on that runs 1.2 million there, 2.5. Yeah, no, it needs 12 million shares. It's light on volume as it's taken that B point out. That's what's going on there.
Because it got that gap at, 38, I believe?
Yeah. At, well, the top of the gap is $40.45. Oh, no. Yeah, the top of the gap's 38.37. Right. I can tell you that these high volume swing lows, October 15th, want to be filled. You know, you can see what just happened with SanDisk. SanDisk opens down $12 today, folks. It's, you know, this thing was screaming that it wanted to trade to $80, and, you know, bottom line is that it's at 83 right now, and on Friday it closed at 97. This is a disaster. And what you have with the SanDisk also is you get monster volume. If you want to take another big high flyer out there, today was Tiffany's. Tiffany's has the same deal. Tiffany has that October 15th high volume swing low. Tiffany's closed on Friday at 102. You're trading at 89. These high volume swing lows out here that are left over from October 15th want to be nailed. You know, so if you're scanning stocks and you're looking to go short the market, that's what you want to line up.
Okay.
Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. We go over to the bond market, folks. This bond market is not only phenomenal, but you're going to see, you know, what I haven't quite figured out yet is like, okay, what high is high? You know, right now, thus far, this is what we have done. The 30-year is a confirmed ABC structure on the way up. What the 30-year had done, folks, is this. The 30-year took out its swing point, took it out with volume, you know, as the 10-year is still trying to get up to its October 15th swing high. That swing high, we're getting closer to it. The swing high is 129.28. We'll hit 129.04 today. The 30-year, though, guess what? We're going to 150 on the 30-year. Now, if we look at the continuous contract, we know inside the 30-year, the continuous contract, the high period, the high in bonds, that as far as we've been alive, is 153.03. And right now, you're at 148.16. So what that says is that you get an ABC structure that an A to B equals C to D is 150. If you understand an ABC structure, whether it's up or down, folks, is that that's a 1-to-1. So the way an ABC structure works is this. Let's say the first move is 10 points. Well, A to B equals C to D would be 10 points. You have, however, inside an ABC structure, and that move there, by the way, when you take the B point out, that move in itself is highly probable. When you go higher than that, meaning then you get a 1 to 1.382. That means the first move is 10, the second move would be 13. That move there is an extension, and that happens enough, not a huge amount, enough, but that's harder to get. Then you get a 1 to 1.50. That would mean that the first move, A to B, is 10, the second move is 15. That's even harder to get. The third move, which is a total turnaround, goes like this. And these are really cool to understand, and you really want to wrap your head around this in this context, because we have fast markets going, and in fast markets, that's when you can do 1 to 1.382, 50, and 618. But if the first move is 10 points and the second move is 16, that is a 1 to 1.618, and that normally is a total turnaround in the market too. So if you did an extension on the way up, guess what? Market's going to turn big time too, not in a small way, on the way down. On the way down, exact same thing happens. And on the way down, if you're doing that on the way down, you get anything close to a 1.6, many times you just do a 1 to 2, because they'll just blow everything right by. Big number. Bottom line is with the bonds, that's telling me that the bonds are going to go after the all-time high, which was generated in July of 2012. That number is 153.11. So the volatility's out there in spades. Dollar index. What do we have with the dollar? Well, here. The dollar index, folks, this morning what we had is this. Dollar index this morning gets up to 92.53. Now, this is a mind blower because 92.53 is the high of 2005. And you got to remember, we're in 2015. Years, months, it was exactly 9 years, 2 months it took to test it. My take is that that high is in the dollar, and for some reason the S&P can't stand the dollar going down now. And we'll find out why, I suspect, next few months. Bottom line, doesn't like it. That being the case, what you have with the dollar, a dollar can make a normal counter-trend move and run down to somewhere, because this move has been so extraordinary, comes down to 86. So you can see in that texture, metals higher, S&P lower, and that's not even counting if we wrap our head around this oil for a second. You wrap your head around oil, and oil just won't stop going down. Oil is going to its 2008 low, and we'll see if that even holds. This has been, this is some heavy devastation in the oil market. We're trading right now at 45.92. Monster volume, by the way. We've already done 421,000 contracts. $32 is wide open in the oil market. It sounds insane. Yes, it does. Guess what? That's where we're going. It's amazing. And what that does do, no doubt, is that puts a hurting on the XLE. It puts a hurting on a lot of jobs in that market, and there's going to be repercussions very quickly. And not a huge amount of states, but enough states. If you, as you're listening at TFNN, right on the front page, you're going to see that we're doing a special, folks. And the special I'm doing is this. This is my daily newsletter. You can test drive it 1 full month. This special is good until next week. And this is how it works. Normally, it's only 2 weeks. You can test drive it for 1 month. You'll receive a copy of my book, The Art of Time in the Trade, Your Ultimate Trading Mastery System, free. That's an $88 value. And I'm going to be doing a webinar. That webinar is going to be on January 21st. It's going to be from 6 to 7. And specifically inside that webinar, what you want to be able to do, if you have my book and understand the system, great. You're going to want to know it. If you don't, get the special. It's not going to cost you anything. Then come to the webinar, because I'm going to be talking about where I'm looking for the S&Ps, the bond, and gold. And you get the parameters, bull and bear parameters specifically. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back. Dow down 111, NASDAQ off 43, S&Ps off 15. We're going to be right back.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We get the Dow down 138, NASDAQ off 51, S&P's off 19. You know, if we go over to American Airlines, this is going to get really intriguing looking at watching all these airlines, folks, and this is why. The oil market, of course, has got smoked. That should bring down their costs dramatically, right? But what we have had in this run-up inside the airlines is something that, number one, is extraordinary, but number two, yeah, they also have a high volume swing low at the October 15th level. Now, from the October 15th level to where we are right now, this is an extraordinary run in itself, because American Airlines went from $28 up to $55. If you understand price and volume, and this is where, you know, you have bulls and you have bears, okay? All the out of time in the trade is about, when you cut to the chase, is where is the supply and demand curve? And what you can see quite clearly is that the supply and demand curve, everyone was in the airlines. That's the bottom line. They were all in it. Guess what ends up happening? You traded up to these higher highs with volume that was extraordinarily light, not small. Okay, so now what happens here? We make a high on the 5th of January. That high was done at $54.54 with volume of 11 million shares. The last time we had any volume is that it couldn't take out a swing point, which was telling you quite a bit. And that last time was December 19th. After an extraordinary run like that, what do you have now? You have volume off the high. When you get volume off the high, okay, we came down Friday and you had 12 million shares. Today we've already done 16 million. Volume off the high, what you'll get here is first. First, you're going to get the gap filled at $45. Right now, you're $49.53. Then it'll build some cause, because it's going to have to build cause to get through the consolidation inside American Airlines that had been taking place from the June time frame all the way over to the July time frame. So what you'll see there is that you'll build some cause, and then you're going to make your way down to this $28. Now, that's going to be pretty devastating. It's like, you got to be kidding me. You just went, oil is down, and you're running from 55 down to there. My take on a fundamental basis, folks, is this, is that the airlines, they can never seem to get it together. They, on the way up, they filled everything up. They got too greedy. Their prices went astronomical. You know, when I have to go someplace for business, it's business. So you have to get on the plane. When you have to do something for pleasure, you don't have to get on a plane and go spend $500, $600, $700 each way. And that's what has happened inside the airline business. Because the last time that I actually went to Boston on some business, I thought I was seeing things when I took a look at this flight. It was big money. So bottom line, what are people going to do? Guess what? Not going to happen. Not going to fly. That's how it shakes out. And what also happens there is this. When I'm thinking about my own thought process, and I'm hesitating saying, man, I can't believe that every flight's $1,000. You can imagine the aspect that going for pleasure, it puts a bad taste in your mouth. So bottom line, I expect you're going to see some heavy devastation on the way down here. Big Blue is still a huge problem. Well, actually, let's go look inside the Dow Industrials today to see where the weakness is versus the strength. The weakness, we have Chevron down 243, ExxonMobil 193, Big Blue is next, 317. Microsoft is after that at 70 cents. Putting strength into the Dow today, even though you're down 124 points. You get DuPont is up 80 cents. Verizon's up 31, Walmart is up 56, and you got Costco up 15. If we go over and we take a look at Big Blue number one to see how this little baby's trading, what you're going to see is this, is that Big Blue is coming into its lowest swing point. Well, first off, Big Blue, once it gapped away, it had gapped away on the 17th of October. That high was 182, gaps down to 161. It tried to make it back inside that whole 161 area 2 weeks ago. Couldn't handle it. Not only it came up there, and you talk about dramatically lighter volume, I mean dramatically lighter volume. Okay, you're talking about counter trend bounces up there with 40 million shares, 19 million shares, and then you come down with 61 million shares. Today, we're coming into that with 34 million shares. She's building cause not only to get down to the 150. What I expect you're going to see, and this is heavy. This is a heavy number, folks. Big Blue, when you take this, and we'll pull this back and we'll put this on a monthly basis. What is sticking out for Big Blue right now is that the bar going all the way back to the highs of October of 2008 at 116, that's where Big Blue is heading. That's a big number. You know, the game is up for basically Big Blue. Well, they're not manipulating their earnings. They're what they've done, and they've done a very good job of it because they're so huge, is that they do massage their earnings. And the way they massage their earnings, of course, is that continued layoffs, because they have 431,000 employees, and buybacks. Big Blue has probably spent more money on buybacks than many equities that are out there at this particular point. So when you take a look at this on a longer-term basis, Big Blue right now is trading where it was trading in January of 2011. It's a big number. Google. Let's go take a look at Google. Why Google? Because Google has also been screaming that not only that it wants lower price, but Google has already broken its October 15th swing low. That's important in the context, folks, that it gives you a higher probability that the S&P is going to get down to that October 15th level. Now, in Google's case, that's when it was at 518. Right now, Google's at 496. To go back to the S&P for a second, this is, you know, if you think things are highly volatile right now, or you think things have been down, well, S&P-wise, okay, it's not even close. We're still at 2027, and the swing low from the 15th is 1820. So that baby has a long way to go down. We go over to Amazon. We take a look at Amazon. What we have with Amazon out here is this. Amazon also saying that we are going after it, the October 15th swing low. Amazon's right at it right now. Amazon's at 291. That swing low, it's a high volume swing low, is 284. The high of that is 293. Amazon today has done 29 million. I think one second. Let's see what we got here. Yeah, we're 2.9 million rather. 2.9 million. That low out there has, it's going to have to do a lot heavier than that. The low price is 284. Right now you're at 291. We had volume of 19 million down there. So we'll see how that straightens out. Amazon on a longer-term basis. This is also. Let's see. Okay, so the first stop down on Amazon, you're talking probably 246. That's a short-term stop. You can actually go to 125. There's some crazy numbers out here. I mean, there's some heavy numbers way down below. Not short retracements. Apple. We go over to Apple. Apple also, that little baby topped out at 119. That's building cause to get into this $99 area. Right now, Apple's at 109.20. We'll see how it hits the 109 area. The first time down to this 109, actually 103. It's 103. 103, when you take a look at 103, it's going to be the September 2014 level. That right there, that's something to keep your eye on. It's going to be a fast and furious market, I can tell you that. Volume-wise, if we go back to the volume here for a second, what we're going to see is this. Coming into the close out here, on the NYSE, you're at 513. Let's see, what do we got left? Oh, it's got plenty of time. Interesting. So 513. So you have a volume expansion as we're coming into this closeout here. The NASDAQ composite is 1.5. So the composite absolutely is going to have the volume. The S&Ps, they're going to be close. So what that still sets up, so check this out. This is pretty cool, actually, because if you're a trader, you're going to love this. That the SPY right now is at 202.59. If you remember when we were starting the program, you get I think it's 202.72. If that SPY can close right at that 202.72, well, that's going to set up a nice little bounce tomorrow, and you can get your bear claws out and sell the heck out of it. This is Tom O'Brien. This is TFNN. Don't forget, folks, if you'd like to test drive my daily newsletter, you can test drive it a full month. You get the Art of Timing the Trade absolutely free. That's an $88 value. Plus, you come to the workshop on the 21st. Stay right here. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. Dow Industrials are down 67. You get the NASDAQ off 33. S&Ps are off 11. If we go over and go take a look at the SPY, this is going to be a classic, folks, okay? The SPY right now is at 202.78. Bottom line is that you're going to get a little bounce out of this if that can stay right there. Now, okay, so when we talk about the bounce, okay, so now I'm going to shift gears on you, and we're going to go over to the future, because when you start talking about bounce, you want to basically speculate, like, okay, so where can this bounce go? If I take a look at the future, what I'm going to do is I'm going to put the mini S&Ps, and I'm going to put them on a 10-minute chart, because what you're going to see when we put this on a 10-minute chart, you're going to see that, okay, you get the expansion up, and it came in with juice, which is a beautiful thing. So when we came down this morning, you came down with monster volume, okay? Someone hit this S&P, and they hit it in an incredible way, not in a small way. Okay, so what you have is that the first expansion up, you know, just right when we were just talking literally 2-3 minutes ago, you know, had the juice behind it. So what that sets up is that, okay, we're at 2023. That sets up, even coming into the close, that little baby can actually get, it has 8 minutes, that it can actually get into 2029. Now, if you're a bear, what you're going to love to see is this. I'll tell you what, if you're a bull or a bear. If you're a bull, what you'd actually want to see is that you want to hang out about 2024, kind of where we are right now, building cause. If you're a bear, you want to see it get up to the 2.9. The reason being is that your first expansion up has volume behind the move. The second one, if you do one after the other, most of the time you're going to die in the vine there. That being said, what I expect you're going to see, though, tomorrow morning is this. You'll see a bounce. That bounce will bring you right up to the 2039 area. And if you get that, what you want to be gauging in the morning is this. Is that you want to be gauging how you came down versus how you're going up. If you don't trade the futures, what you can do this right inside the SPY. And inside the SPY, what you're going to do is this. The way the SPY came down, we come down with 6.8 million shares on a 10-minute bar. The bar that just went up right now was a beauty. It was 5.9 million on the 10-minute. You're on the second one right now. What you want to see, if you're a bull, you want to hang here, and you want to actually get over, it'll be tomorrow morning, you want to get over the 203.30 with some juice. If you're a bear, what you'll get over that, I suspect, but what you'll come into is that you're going to come into that vicious downdraft from 0930 this morning, and we'll see how this whole thing shakes out. But we certainly have high volatility in that market. That high volatility, folks, is going to be here for quite a while. If we take a look at the 3 Qs and you want to see the correlation inside the 3 Qs, this is what you have. 3 Qs, the last 10-minute bar we did 15 million shares in that 10-minute bar. And I mean 1.5 million shares. and what you're going to be going into, you're going into 1.8 million. That bounce there. Now, where the correlation comes in on the Qs is this. I don't expect the Qs would bounce as high as the S&Ps. So the bounce you're looking for on the Qs, you're at 101.70. You're looking for 102.93. We go to the small caps. You'll take a look at the small caps. We do the same type of exercise on the small caps. The small caps, I do expect what you're going to see. So this is really sweet. The small caps, I expect right now you're at 117.15. The small caps, you're dealing with 117.52. Now, what you also get is this. Because the small caps had such light volume on the way down today, it should bounce really well. But what I expect you're going to get is that it's going to show the weakness. So the small caps more than likely are going to show their hand first if you are setting trades up in the morning. That's how this kind of shakes out. And don't forget, folks, at TFNN, our man, Mr. John Logan, kicks us off every morning. So we go live programming 8 o'clock in the morning to 6 o'clock in the afternoon. You get John from 8 to 9. Our man, Steve Rhodes, 9 to 11. Basil, 11 to 12. Larry Pesavento, Darryl Martin, Dave White, and then myself back here. Bottom line is that there's going to be huge amounts of volatility. I expect those volatility to stay in the market. If you happen to be in the metals market, you got some action. You get some big action. The XAU, the HUI, they've both gone topside. They have the juice in them, too. Let me just see something for a second. The volume was coming in all these equities. Yeah, it's awesome, man. So the volume is also coming in. The XAU and the HUI, those have broken over the consolidation. The HUI was the first one that broke topside. That broke topside on Friday. You're getting a wide price spread out here. You're getting the accelerated volume. You're getting all of the above. And after this has been quite a consolidation you've been in, and it's a large consolidation, folks. It won't take anything for the XAU to basically get up to 98, and you're only at 79. The reason being is that how fast we went down. We went down from 98 down to 64 in a heartbeat. Bottom line, once you get on top of the consolidation, you can go up just as quick. We go take a look at the HUI, and what you're going to see inside the HUI is the same type of deal, meaning you get out of the consolidation. The HUI had come down from 245 down to 146 in a heartbeat. Guess what? You're over the consolidation. You can get back topside just as quick. And, of course, when you're coming off a smaller number, it's much easier to get up into much higher highs. You know, we go back to the SPY again for a second. This is going to be wild. SPY is not going to be able to hold that number. SPY is at 202.57. And this is saying quite a bit, folks, about that bounces can't even get going in the marketplace. What is that saying? That's saying weakness in an extraordinary way. That's what this is all about. So bottom line is that buyer beware. You know, that's where this shakes out. Oil market is absolutely toast. This is whatever is happening there, you know, whether we have huge amounts of supply or not enough demand, you know, I expect you're going to see a lot more devastation. The XLE is trading right now. XLE. So, and the XLE had basically led things down. The XLE is already, you know, the October 15th swing low on the XLE is 77.51. It's at 74.20. Kind of just like Google. Blew it away. We'll see what it does to the December 16th swing. That December 16th swing is 72.51. You're at 74.20 right now. And if you are an oil person, meaning you want to own those oils, I'll give you a benchmark. Do not think about buying the oils, folks, until ExxonMobil, it's at 90 right now, until it gets down to about 81. At 81, it's possible that these oils, that might be the deal, but wait till it's down there. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back. Dow finished down 88. NASDAQ off 39. S&P's off 13. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, a great week. This quote here is by Robert Dahl. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. The Dow finished down 96, NASDAQ off 38, S&P's off 12, gold contract up $17.30, traded at $1,233 an ounce. Silver up 15 cents at $16.57 an ounce. Platinum up 10 at $1,242 an ounce. Copper down 3 pennies at $2.72 a pound. Light sweet crude smoked again, down $2.43 at $45.93 a barrel. Bonds, you had the 10-year up 16 ticks, 129.02. 30-year up 27 ticks at 148.12. 30-year bond, folks, okay, is a ABC structure, confirmed ABC structure on the way up to 150. Big number. No two ways about that. King dollar up 83 ticks, trading out at 92.23. The euro down 6 at 118, and the yen off 16 at 118.34. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Let's start off with the futures. This is what we have, folks. S&P futures, you are at 2023. Futures, we had some juice on the way down out here today. Contract-wise, we did 190,000 contracts, 1.9 million contracts, rather. That bottom line is coming into 2.3 million. That being said, if we go over to the SPY and look at the SPY for a second, now the SPY didn't hold price. We're 202.65. The number that, if it closed above, it definitely would have got a bounce here, is 202.72. The way this is trading, however, you're going to get I suspect you're going to get a slight bounce tomorrow morning. The market has had a hard time holding on to price, period. Now, I'm talking about a bounce, a slight bounce in a bear market, folks, okay? Bottom line, you have the swing points that were generated out here from January 6th, which on the SPY is 198.55. December 16th, which is 197.86. But the big number out here, particularly if you're long and strong, is the October 15th swing low at 181.92. That's where we're going. We're going to look at the NDX 100. We'll use the 3 Qs. If you take a look at this NDX 100, this is what you have. We came down today. NDX 100 is trading at 101.55. You came down $1.07, and we did that also on lighter volume, meaning you're coming into a swing point out here of 66 million. What we did out here today is that we did 33. That sets up a slight bounce. That bounce, I suspect, you want to sell that bounce if you're a trader. If you're a long-term investor, get your stops in, folks, because we're going a lot lower. The small caps. What do we have with the small caps? IWM. IWM closed down 39 cents at 117. You're coming into 6.7 million shares, and the small caps only did 2.7 out there. Small caps also want to bounce. I'm not expecting any of those, by the way, to go back to highs. This is a small bounce in a market that wants lower price. Gold contract. What does gold want? Gold wants higher price. You had the wide price spread, accelerated volume, all of the above. Gold contract out here right now is trading at $1233.90. We did 155,000 contracts out here. The swing point, and this is about as good as you get, it's $1238.90. I expect what you're going to see out here is that tomorrow morning, I expect that that little baby is going to basically get taken out, which is one beautiful thing. You know, we'll see how it runs into it, but I expect the gold contract's going to be running up to this price point of $1256. The XAU and the HUI, they both excuse me, the XAU had broke out of its consolidation on Friday. The XAU broke out today. XAU is trading at 79.03. XAU is on its way up to this $98 area. The HUI, we take a look at the HUI. That had broke out on Friday. The HUI is at 194.78. That XAU wants to run up to 237. So you're talking about some big numbers on the way up. The bonds. The Eveready bond market, no doubt, is amazing. Bonds finished at their high today. You're at 148.14 on the 30-year. The 10-year is yielding 1.9. So if you want a mortgage, folks, go get it right now. That would put a 30-year mortgage about 3.9. The 30-year is yielding 2.4, which is just amazing. Imagine, bottom line, 2.4. But guess what? 2.4 is high in the context of still competition in Europe, because you get the United Kingdom at 2.3, France is at 1.7, Germany's at 1.2. When we talk about the competition inside the 10-year, it's really wild. We're so much higher than everyone else. We're at 1.9. France is at 0.7%. The United Kingdom is at 1.5. Germany is at 0.4%. Bottom line, you can see where I'm going with this. The bottom line is that rates are going to continue lower. King dollar. What do we have with King dollar? What King dollar did out here today, folks, is this. King dollar got to the highs of 2005, right to the tick again. Couldn't handle it. That's 92.53. Right now we're at 92.22. My take is that King dollar has topped. We'll see where this shakes out. But bottom line is that that's what it looks like at this particular point. And I don't expect that to change, by the way. The way that King dollar had gone into its highs last week was pretty dramatic. We take a look at some of the high volume stocks out here. What you have is this: is that we had SanDisk was down $13. You had Micron off $1.80. Out of the high volume stocks, by the way, you get 2 or 3 that are green. Cisco is up 26 cents. Pfizer is up 12. The rest of them are all red in an extraordinary way. After the close out here, we had this is Alcoa kicks off the earnings, and the first kickoff with Alcoa. Alcoa closed. Let's see what she's trading here. So let's see what they have to say. Alcoa is trading right now at $16.17. That's where she closed. She's trading at $16.30. Numbers go like this in Alcoa. The estimate was 27 cents. They made 33. That's the bottom line. Top line estimate was $6.05 billion. They made $6.4 billion. So bottom line, they made it at the top. They made it at the bottom. And guess what? What does Alcoa have? Alcoa has a high volume swing low hanging out here at the December 16th level. Now check this out. This is pretty cool. So Alcoa, October 15th, had a high volume swing low. That was 1371. It goes from 1371, October 15th, and gets all the way up to 1718, light volume. It comes all the way back down, and it doesn't break the October 15th swing low. What it did, however, folks, is that it gets into it, and it's going to go test it again. That level is 1441. So what I expect you're going to see, it's going to back off, number one, and we'll see, in fact, what kind of juice it has, because that's building cause on the way down. That's how that's set up. Inside the Dow Industrials today, the weakest was Chevron CVX. We take a look at Chevron. Chevron is coming after its high volume swing low of 100.15. That's at 105.88 right now. ExxonMobil was the second largest laggard inside the Dow Industrials. That's trading at 90. That wants to go down to 86. IBM was the third one. IBM right now, IBM, is toast. IBM, folks, is at 156. IBM's making its way down to 116. How we go after this swing low is going to be a big number with IBM, and it's going to be hard for the Dow to go anywhere with IBM wanting lower price. You know, when we take a look at IBM just the last 2 months, we've gone from 195 to 156. So that, no doubt, is a big number. Inside the NDX 100 today, it was SanDisk, SNDK, that gapped lower in an extraordinary way. Would gap down 13 points. You're at 83. Micron Tech followed it right down. Micron was down, not that bad, actually. Micron's going after its lower swing with volume. Micron's trading at 31. That wants to get down to 26. You stay right there, folks. We're going to come back with our Tigers. Amy Smith from IBD. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 96, NASDAQ off 39, S&P's off 12.5. And as we do each and every Monday at 20 past the second hour, we have our tigress, Amy Smith from Investor Business Daily. And folks, if you haven't either took the 2-week test drive for the newspaper or 2 weeks the digital at investors.com, the way you can do it very easy is right here, right now. You go to TFNN. You're going to see the banner on the right-hand side, investors.com. You hit that banner. You can take your choice. 2 weeks the newspaper delivered to your house 6 days a week, or 2 weeks at investors.com. Since we're all on computers, check out investors.com, folks. There's a lot of great stuff that is on there that can educate you each and every day. Amy Smith, what's going on?
Mr. Tom, well, I'm doing fine. I was in your neck of the woods, but not close enough to make a visit. I was in Miami over the last weekend.
Isn't Miami fun?
It was. The trouble is, I was in. I did the workshop and I was out. So
I know.
I intend to do more next time. I was. One thing I found interesting as a woman.
Yes.
Right. Okay. So I'm walking by a lot of these shops. There's a difference between the East Coast and that area and the West Coast.
Oh, yeah, big time. Yeah.
There was a lot of, I don't know how I say this, there was a lot of bling.
Oh, this is what ends up happening. And if you're thinking of moving to Florida, folks, okay, you can take your choice. You can get the Miami, Boca, penny loafers, Porsches, but there's huge amounts of money over there, but then there's a lot of BS over there, okay? There is. Or you can come to the West Coast, right, and you have a Midwest influence, more laid back, less BS. We had a house in Boca for 15 years. I know both sides of it. And it's day and night. It is day and night. I mean, it's just totally different. So check this out. This is how different it is. Not even knowing the difference. When I first got to the West Coast, right, I'm at a dinner party once, Amy, and folks, this is a crazy story. I'm at a dinner party, and I'm always used to wearing a suit jacket with my shirt open, and and my penny loafers, right? Okay.
Yeah.
At the dinner table, a guy says to me, "What are you trying to sell?" I looked at him and said, "What are you talking about?" It's just funny. It's just it's just funny how it works. So,
for instance, there was an Herbalife conference with a lot of these people in the parking lot. They had Herbalife, painted on their cars. You could see it because I was at a convention center, right?
Yes.
So the Herbalife, the ladies, and very attractive young women.
Yeah.
They looked fantastic, but I thought there was like a cocktail party or something. I mean, they were dressed like they were going out for nighttime.
Oh no, big time. Yeah. Yeah.
And it was, at 10 o'clock in the morning. So I was just a little bit, the jewelry's very big, the hair is big.
Listen, they get dressed for a cocktail party at 10 o'clock in the morning at lunchtime. There's no doubt. I've been there. I know. It's crazy.
And the jewelry was big, and the colors were big, and it was very interesting.
It is. It's fun. Life's a trip. No doubt, man. No doubt. So what's the IBD take on this market thus far?
Well, we've got some confusion here. So here we had a very unusual call. So last Thursday, we had what we call a 15th day follow-through day. Just to simplify it, basically, we had the low, an attempted new rally December 17th, but we did not undercut that low.
Okay.
So we kept the count in play, if you will.
Yes.
So on the 15th day, last Thursday, things were, Wednesday and Thursday last week, things were looking peachy.
Yes.
And but here again, we have oil lower today. To be honest with you, this rally attempt that we saw as an attempt doesn't look too good. When you get a distribution day or a heavy volume sell-off that soon after a rally attempt, it usually fails. So, and stocks are not really acting the type of stocks that we follow. There's some other stocks that are doing okay,
sure.
But the growth stocks are not acting right.
And in that can slim deal anyway, Bill says the 15th day is not a good time. You guys like a follow through way before a 15th day, right?
Exactly.
Right.
So it was late. There's just all kinds of things that were wrong with it. And, we seem to be in this slightly volatile period of time. We keep thinking that we're going to correct, and then the market will bounce back. And
I
then we
know.
think, okay, maybe now we're going to correct, and
Yeah,
then
right.
the market bounces back again.
Yeah.
So it's a tricky market.
Right, there's no doubt about it. And, of course, Alcoa just came out with numbers, and what was interesting, the numbers, Alcoa beat at the bottom, beat at the top, it's up like 20 cents or something, but that's still not having a hard time getting any real traction. It came off that high of 17.50, went down to 14, and at 16.50 right now,
And then you had a stock like Tiffany's, if you see that one. Oh, man, that one got killed today.
Yeah.
And
See
they
all
just
those
said,
women over in Boca aren't buying any more jewelry.
Well, they said that their holiday sales were disappointing. Their forward-looking guidance is disappointing. They said their global sales are not doing very well. And so that sort of leads me into the next. Here's the only thing that possibly could turn this around is that you're right. We are. Alcoa started. We're in earnings season, and we'll have to see.
Yes.
If later in the month, this week right here, we got a lot of financial names, but later in the month we get into some of the more interesting growth names that we would look at. GoPro, Mobileye, and so on. We'll have to see. If these companies really rock their earnings, it could be that that'll be the catalyst to turn the market around. On the other hand, because the market is forward-looking, are we starting to get jittery about interest rates in April or June? So we'll have to wait and see.
Yeah, I mean, what's amazing, there's no doubt, and folks, the bond market went higher today, lower yield. In fact, I think this is the lowest yield, even though in the 30-year period that we've had. Right now, our 30-year is yielding 2.499.
Interesting. So how do you think, Tom? What do you think? We get a little blip, not major, but we do get a blip in April or June on the interest rates. What do you predict out of that first little move?
I don't see them going up at all.
Okay.
They can't. Well, to me, that they really, I see that they can't, or of course they can, but it really has to do with, Amy, that United Kingdom. So it's competition. United Kingdom's at 1.5.
Right.
France is at 0.7%. Germany's at 0.4. Italy, who's broke, is at 1.8.
Right.
Spain, who's broke, is at 1.6. So when sovereign funds are large trust funds, which, inside their prospectus, folks, they have to own some bonds. When they're looking, they're saying, okay, do I give money to France at 0.7, or I give it to the United States at 1.9%? Or do I give it to Italy at 1.8 or the United States? Our rates are still too high compared to the competition.
Yeah,
So I don't see us. And then the fear in the market pushes, people into bonds.
Oh, absolutely. And with the Fed, if the market is acting tremendously weak, that would sort of lower the chance that they would raise rates also. They have to see.
And this is the crazy part, folks, and Amy. There's not enough bonds. The U.S., okay, our deficit's going down. We don't have enough bonds for the demand that's on the other side. And that's really intense. Never mind the short position that's out there that they're going to get squeezed beyond belief. So it's weird. I know it's weird, but it's blowing my mind. But it looks to me like we're going to basically go a lot higher, meaning in lower yield. So.
Well, you're right. Now, here's the other thing, too. A stock like Bit Auto, I had it in my notes. It was acting fine. Last week, it took a bounce. Today, the stock tanked. I mean, that one's another one that got hit.
Which one was this now?
It's a Bit Auto. It's BITA. The only reason I bring that up is because it sort of dovetails on what you're talking about, which is take a look at China. And we got
volume,
this report.
yeah.
Look at this. See, we got a report that China's auto sales are down and their economy is slowing. So that sort of adds some justification to what you just said.
That's intense. Listen, folks, IBD, test drive it right now. Amy, you have a great week, safe week. Look forward to speaking to right here next week.
You too. Take care, Tom.
Okay, thanks. Bye-bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 96, NASDAQ off 39, S&P's off 11.5. And as we do each and every Monday at 30 past the second hour, we get our man, Mr. Chad Coco from TD Ameritrade Think or Swim. Chad, folks, has the best option show on the planet. It's right here every Tuesday, 12 to 1 Eastern Standard Time. You can get that program right on your cell phone. On your cell phone, folks, TFNN.mobi gets you the full audio. And don't forget, at TFNN, we broadcast live every trading day, 8 o'clock in the morning to 6 in the afternoon. If you'd like to get Tiger TV, which gives you the audio plus the video plus all the charts at TD Ameritrade, Thinkorswim, go to TFNN.com on your cell phone, hit the camera on the right-hand side. You'll get delivered the audio plus the video with a great education. Chad Coco, what's going on?
Well, how's it going?
Going great, man. You having a good day out there?
Yeah, actually, I was meeting all day, so I didn't really get to see much of the market, but...
Well,
is that right?
you get the VIX out here. It pops up to this $20.44 area, and it looks like things are getting a little more volatile out here.
I did see that, yeah. So I'm kind of expecting volatility to stay in the market at least up through the spring. We'll see what happens from there, but that's kind of the way I'm looking at it at the moment. Yeah,
and in fact, folks, if you saw this morning on Squawk Box. Man, J.J. Kenahan from TD Ameritrade Thinkorswim, he was on there this morning, and it was really interesting, too, because, it's really funny, folks, okay? Volatility, bottom line, folks can't stand it. And they're asking him 3 times, and each time he said, well, I just think it's going to be a little more volatile. But, I can understand why folks don't think I don't want volatility because it's been so long, Chad, that since we've had volatility in the marketplace. You know what I mean?
Right, yeah, exactly. And if you're not used to trading with volatility, you can see these big swings get a little scary. But if you're an options trader, volatility is actually a good thing for us.
It's huge. There is no doubt, folks, because what happens is this, is that fear and greed run the market, okay? What Chad does a great job of, what Thinkorswim does a great job of, is educating traders so that you can understand exactly what you should be doing strategy-wise. They're not going to tell you whether to go long or short, folks, but strategy-wise, they're going to explain to you what strategy does, whether you're holding equity positions or you're looking to be a bear or a bull. So it's a great platform. Number one, I use it each and every trading day, whether you're trading options, futures, commodities, or currencies. You can come over to our website at TFNN, hit the banner. You can bring the account up, and they'll put paper money into it so you can really understand how that works. And then, of course, they have lessons out there that help you dramatically. And, of course, when Chad is on every Tuesday from 12 to 1, he walks you through a bunch of different strategies. So what are we going to be looking at tomorrow, Chad?
With the show?
Yes.
So we're going to kind of carry on from what we started off last week with the getting into options trading if you've never really traded before, what kind of stuff to look at. I'm going to continue on that process until we get into some more complex options. We'll see how much time we have.
Yeah, and, bottom line is that what you do have out here and is that if you're long and strong, folks, okay, what you absolutely want to do, please listen to the program, because there are ways that you can stay long and strong, and you're not necessarily hedging out what you have, but what you're doing, you're hedging the downside. That's what it's coming down to. And then you can make the choice that what does that hedge specifically mean, okay? Because this run, no doubt, has been an extraordinary run the last 6 years. I'd hate to see people give back huge amounts of that run when they don't have stops on. Or, there's plenty of people that, very well may want to hold on forever. And if they want to hold on forever, there's nothing wrong with that. But maybe they should sell calls against a position,
Yeah,
not
exactly.
naked, but against the position,
Exactly. Lower your cost basis. So even if you are wrong, so at least you're getting a little bit back off of what you have.
No doubt. No doubt. So, hey, weather-wise, how cold did it get last week, and how cold is it now?
I think we got down to a high of 2 degrees last Wednesday or Thursday.
Okay.
We had a lot of snow came in, so there's a lot of snow on the ground right now.
No, that's,
about 30.
That warms it up. I know. What's amazing, folks? Snow actually warms it up. So, that's nice that the snow come in. Amazing.
And they're telling us 40 by the weekend, so shorts weather.
Oh, 40 by... Yeah. Well, hey, listen, man, I got my shots on.
Yeah?
Yeah. I get my shots on and my bear claws out.
Must be nice.
Listen, man, you have a great night, safe night, and, of course, we look forward to the show tomorrow, Chad.
You as well. Nice talking to you.
Okay, man. Have a great one. Have a safe one. That's 12 o'clock tomorrow, 12 to 1 Eastern Standard Time, folks. You can get that program anywhere in the world, right on your cell phone, TFNN.mobi. Now, let's go over to the gold market, folks. XAU, HUI, all broke topside, have the juice behind the move. If we go to the GLD and we take a look at the GLD right now is trading out at 118.56. Last time we were up at this level, we had 10 million shares traded, and what we did out here today is that you've done 8.2 million. Now, it's going after this tomorrow. The high that it's going after is 118.99. And the way this is set up is that the GLD looks to me it's also going to break with volume. And the reason I say it is this. When you're going after a swing point, folks, what you like to do, what I like to see, is that you come up to the swing point and you stop right before it. See, when you stop before it and you are coming up with volume, what does it do? GLD can rest tonight, get some nice rest, wake up, have a good breakfast, a couple steaks, get into that steak. That swing point at 118.99, when we closed at 118.56, can be game to get taken out with volume. The correlation goes like this. When you wake up next to that swing point, you jump over it at the get-go. As you jump over it at the get-go, two different things end up happening. People love buying breakouts. They're in there. People that were short, they have to close. That acceleration works on itself, number one, puts real juice behind it. The GLD right now is at 118.99. I expect what you're going to actually see out here very quickly is not the 118.99. You're going to see 119.86. This thing wants to run straight, actually the 120.50. Looks to me like that wants to run straight up to the October 21st swing high. The XAU, the HUI, they broke their consolidation, have the juice behind the move. XAU is trading at 79. That wants to run up to 94. We take a look at the HUI. That had broken out on Friday, had the juice behind the move. The HUI is at 194, and that thing wants to run up to 237. So there's some big numbers out here. After the close, you had Alcoa come out with numbers. Alcoa made their numbers. In fact, they did better at the bottom line and the top line. Not much movement, though. Alcoa closed at $16.17. It's trading at $16.43. That's not enough to move the needle. The estimate was 27 cents. They made 33. That was the bottom line. Top line estimate, they did very well, too. Top line, they took in $6.4 billion. They were looking to take in $6 billion. What does Alcoa have out there? Just as over and over and over again, folks, what you're dealing with is that you're dealing with this October 15th swing low. If you want to see how a few of these got smoked out here today at the October 15th swing low, SanDisk, SNDK, SanDisk was down to $13.50 out here today. The high volume swing low on SanDisk is 80.26. That gap down hit 82. It's not done. That's not done, folks. That's more than likely is going to blow away the October 15th swing point. Tiffany's, same setup in Tiffany's. Tiffany's gapped away. And, bottom line, folks, is they'd never let you out of the market on the way down. Tiffany's had closed on Friday at 102. It's trading right now at 89. Monster volume. That also had a high volume swing low at 85. Thus far out here today, we got to 87.50. That also wants to basically take that apart. If we do go over and we take a look at the SLV, now the SLV, folks, a couple of guys Tigers want to look at the silver market. This is the iShares Silver Trust. Whatever's going on with silver, it's not the same thing as gold. Silver needs strength. The SLV out here just doesn't have it today. What does happen inside the silver market is that silver is twice as volatile as gold. That's how silver trades. What we haven't had yet, I'll bring the future up here for a second. What we haven't had in the silver market yet is that expansion going higher. The silver contract today did 23,000 contracts. You need a lot more than that, a lot more. We need silver to bang out, you're talking about 60,000 contracts. It's not there. Right now, it's not there. It doesn't mean it won't go, but technically, silver needs wide price spread, accelerated volume. This is Tom O'Brien. This is TFNN. You stay right there. We're coming right back, folks. Dow finished down 96. NASDAQ off 39. S&P's off 11.5. Gold up $18. We're going to right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say You can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. We had the Dow Industrials finished down 96. You had the S&Ps off 11. NASDAQ was down 34. Now, as you come over to TFNN, folks, you're going to see right in the very top in the carousel, you can test drive my daily newsletter, Market Insights, 1 month, absolutely free. It's a special that we're doing. It's only good until this Sunday. What happens is this. Normally, it's a 2-week test drive. You can test drive it a month. You get that for free. You get a copy of my book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. We send that out immediately. I'm going to be doing a workshop on January 21st from 6 to 7 o'clock at night. You get that. All of that package is free. If you like the newsletter at the end of the month, you'll get your credit card will get charged for the following month. If you don't like it, you cancel it. You get to keep the workshop. You get to keep the book. Bottom line, it's a great time to test drive the daily Market Insights. Back to the market. We take a look at the market. So check this out, okay? I've been talking quite a bit about the October 15th swing low. Piece by piece, folks, what has happened is that we're getting down to that level. Individual equities themselves have been coming into that level one by one by one. That brings the probability up dramatically, folks, that number one is where you're going, and we'll see, in fact, if that level will hold. It hasn't held in many equities. If we go over to the XLE, what you're going to see, which the energy market is what has, basically led this downdraft. The amazing part about it is that when you think about the XLE was going south off $100, folks, before anything, before oil even croaked. It went from $100 to 77. The XLE now is at 74. Couldn't hold price. What we will see with the XLE is this: is that what type of juice we have at a high volume swing low, which is $72.51. What you had out here today is you had a contraction of volume. We did 28 million shares. That low there has 57. Do not bite on this XLE for dead cat bounce. Let me show you something, because I've had a couple of my friends actually emailed me. There's plenty of other people that want it, oil stock. And let me show you something. So here's the rundown, I think, if you're going to try to buy oil stocks. If you take a look at ExxonMobil, when you look at it, it's like, hey, man, this is holding up pretty good. I mean, ExxonMobil came off a high of $104. You're at $90 right now. Exxon at this level pays a 3% dividend. So when, fundamental basis, you look at it, man, that's a good scene. Technically, it's not a bad scene either. What you have to wait for is that you have to wait for this low to get hit, which is 86.60. That's the first part. I don't think that low is going to be the low where you should be biting, though, and I'll show you why. Because when you put this on a monthly basis, what you're going to see, and this is where you got to let the market talk, walk, and squawk to you. When you put it on a monthly basis, what you're going to see is that the high of October of 08 is $81.75. You want to wait till it gets there, folks, okay, which is another $10 down. Well, it's $9 down. Because that's a high volume bar, and it will be very tough to break that. But if you just wait till it comes down there, if you get an expansion of volume, when you get into that deal, do not even think about it. Don't even think about it. Chevron, bottom line, the volume is contracting on Chevron also. So we'll see if these high integrated oils are going to bottom at the December 16th low, because they're already down 25% off their highs. Now let's go into the financials. Why the financials? Because what we do have out here coming this week You're going to have J.P. Morgan come out, Wells Fargo come out. That's going to be on Wednesday. On Thursday, Bank of America, Schwab, Citigroup, and Morgan Stanley. On Friday, Goldman Sachs. Okay. So check this out. On a fundamental basis, wait to hear this. You want to be an attorney for the banks. The number that came out today that the banks, the 6 large banks, have paid $30 billion with the B in legal cost in 2014. $30 billion. How's that? It's pretty intense, man. Bottom line, though, they're making money hand over fist. The 6 largest banks, their revenue, they're expecting their revenue, their revenue, because this is going to be the last quarter. They're expecting that they actually made, folks, $413 billion. That is not the record. The record was in 2010. But bottom line, that is a big number. Now, if we go over to the XLF and we take a look at the XLF and how it's trading, what you have is this. What do we have out there? A high volume, October 15th swing low. That's where we're going. It's $21.25. We're at 23. We had volume out here today in the XLF, and the banking structures, folks, have not fallen apart. There's no doubt about that. We had volume out here today of 31 million shares. It was going into the 48 million from the 6th. And bottom line, just let it be. Let's see how it comes into that area. But what I expect you are going to see is that you're going to see lower price. You're going to see that October 15th swing low get beaten up. We're going to get into it. If we go over to the Berkshire Hathaway, BRK. Now, BRK, folks, the B shares, that is the largest weighting inside the XLF. And what you had out here today is this. So check this out. This is pretty cool. You had an expansion of volume in Berkshire Hathaway. So this is going to be wild watching this whole thing shake out. What we had is that Berkshire Hathaway today did 5.9 million shares. It's going into 4.1. This also has a high volume swing low at 132. So that's a big number, and that is the highest one. And it's possible that has to do with the rails. You know, Berkshire Hathaway, of course, is a monster number one. They own a huge amount of different companies, because there's no doubt it's pure companies that Berkshire Hathaway owns. If we go over to the Morgan Stanley, we take a look at Morgan Stanley. Morgan Stanley is going to be coming out with numbers on Thursday. Morgan Stanley has that high volume swing low hanging out there at 31. You're at 36. J.P. Morgan, J.P. Morgan is trading at 58, and she has a high volume swing low at 54. Let's see, BAC, Bank of America. I think we already did that one, right? Bank of America, that has the high volume low at 1543. You're at 1668. Citigroup is hanging out there. Bottom line, also with a high volume swing low. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow night. Go get them, folks.